But what is not stopping is the listing action. We have Canara Robeco AMC, which got listed on the exchanges with a premium of 5% against its issue price, and it surged from those levels as well. The company's IPO was subscribed almost 10 times during the bidding process. Right now, the stock is up around 14.5%. Rajnish Narula, who is the MD and CEO at the company, is joining us now to talk about the future outlook and the business as well. Mr. Narula, good morning. Thank you so much for joining in. Well, now that you're listed, you will be able to give us more idea of the future prospects of the business as well. For an AMC, of course, the AUM growth matters the most, and the fee that you take on that in terms of revenue contribution also is something that investors would like to know. What is the plans with AUM growth going forward? What are you targeting? You've seen around 30% CAGR in last 2 fiscal. Is this something that you will continue, or it could be better than that?
Well, good morning, and thank you for having me on the show. It's a proud day for all of us at Canara Robeco, especially the staff that have built this beautiful company. Yes, you're absolutely right. We've been one of the fastest growing AMCs over the last 5 years, and we have put up a very impressive CAGR of 30%. We do believe in the India story, and we do believe the industry is poised for a breakout moment as well. So we do see a long runway, and we do see growth momentum, and we are confident that we will keep up this momentum going forward as well.
Mr. Narula, good morning. Thank you for joining in and congratulations on your listing today. You know, Mr. Narula, your institutional business, your folios over there account for less than 1% of your overall business. Is there a plan to increase this portion, say to at least mid-single digits first before you go to double digits?
Well, you know, in the institutional business, typically is a high ticket business. So typically the number of folios tend to be smaller. We are building a retail franchise. We want to have a dominant position on the retail franchise because for us, retail money, especially in equities, is very sticky. And we are on a T+1 business model. So we shouldn't forget that because the industry is such that all investors can take money out on the next day, right? So if you want to build a company that survives time, you need to go retail and you need to go equity.
Anyway, it's the DIIs or the retail, actually the retail money that's coming into the market, especially when it comes to the SIP number that we've been talking about. Mr. Narula, I wanted to understand the competition parameter right now. We have almost 54 AMCs, if I'm not mistaken, out of which 4 to 5 are listed now. In terms of competition, what are the strategies that AMCs can take up to increase the AUM growth or improve on the AUM? Because at the end of the day, yes, we do have a lot of products, but growth will be limited because of the number of accounts that we are seeing now.
I have actually a very good question. You can actually have 2 strategies, I believe, in our business. One is a sales-led strategy. So you invest a lot into distribution and you build your business from there. The other is the investment-led strategy, where you deliver on performance, a consistent performance over time, and then AUM growth naturally happens. We prefer the investment strategy. That's going to be our focus going forward. It's been our focus in the past as well, where all our funds which have crossed 10 years have outperformed their benchmarks.
Any particular product which will see higher growth? Is it going to be equity? Is it going to be debt? What is the concentration looking like in the overall AUM?
Well, we believe that equity markets will outperform all other asset classes 7 out of 10 years. That's our firm belief. And hence, we are positioned accordingly. 91% of our AUM mix is in equity because of that belief.
Mr. Narula, Sonal highlighted one bit about the number of AMCs. It almost makes you believe that the investors or market participants are almost spoiled for choice, right? With BlackRock now also joining the fray, what do you do to first protect your market share and B, then grow it further as well?
Well, this in a way is a very beautiful industry. You only get money or AUM based on performance. So yes, initially there will be hype around brands that come in, and it's good to see more AMCs coming into the marketplace. It means they believe there is a huge runway and there's opportunity in this space. But you can only get AUM because investors and unit holders only reward you on your track record. So you need to perform first before you get money. And I think everyone has his own unique race to run. We will run ours. We will build an institution that survives time.
Okay, Mr. Narula, this is an industry which will not have a lot of expenditure. It's a capital-light industry in general. So the way you can improve profits is by improving your revenues overall. What is the AMC's fee structure? How often can you change that fee structure? Just trying to understand what could the levers for revenue growth be basis the fee structure.
Well, as you're aware, the fee structure is based on a TER that you can charge to the schemes, and each TER is basically mandated by regulators. So for equity schemes, it's different. For debt schemes, it's different. And you're absolutely right that the fee structure and your yields will a lot depend on the revenue growth that comes through. But typically, it's AUM driven, right? So it's the kind of AUM you get from the markets that you get that are very important, and from the kind of distributors that you get your AUM. That's important. But to me, if you have to put a single factor in terms of growth, it will be AUM growth that will lead to profitable growth overall. Because you're absolutely right, it's a capital-light business, and we have operating leverage in our business. Because the same fund manager can manage 1,000 crores or 10,000 crores.
Final question from my end, at least, Mr. Narula. What are your strategic priorities now that you have become a listed company? You can tell us about the next 3-year, 5-year plan. And if you could also tell us by what percentage are you aiming to grow this year? We're already done with the first half of the year. So based on what the road ahead looks for the second half, what kind of revenue growth, margin performance are you aiming for?
Well, if you're asking for strategic focus, we are a people's business. So our strategic focus is to be a company that can attract talent. For me, the day you stop attracting good talent, that's the time, you possibly will start losing business. So for us, we are a people business, focuses on our quality of people and the talent that we have. That's very important for us. Yes, there are other priorities as well, which is about growing in different markets, different product lines that we have. We have a lot of opportunities in considering different product lines as well. We will possibly launch another fund before the end of FY26. And clearly, in terms of growth rates, we believe that we can replicate similar growth rates as in the past, going forward, at least for FY26-27.
All right, we take that point, Mr. Narula. Thank you so much for joining in today with your thoughts and the outlook in the business going forward. The stock is up 14% after a 5% listing pop that we saw on opening. But with that, we'll do one thing. We'll leave you with a quick note. As you must have seen on the screen, there is a money control stock score just above the line graph. This is a score assigned to each stock based on money control's multi-factor algorithm. We'll get Infosys, because Infosys is also reporting numbers, so that stock will be on our radar today. So how is this particular factor calculated? It is calculated by analyzing over 40 parameters, including both current and historical financial statements, price charts, and technical indicators. For each stock, each of the individual parameters considered for calculation of the 4 factors are assigned a score, which is then aggregated to arrive an overall Q factor score. There's G factor score, V factor score, and T factor score as well. All of this is explained to you on the screen. But do remember, this is not a buy or a sell recommendation. Any investor viewer is advised to carry out necessary diligence on their own or through a certified registered financial advisor for investment decisions.